The property market will never be the same. This is a market that I haven't seen for quite some time, probably since COVID. People buying without pre-approvals and the banks taking far longer to turn around, everything going to auction as well. It is a seller's market at the moment. If you think you're getting pre-approved and you're not, some banks have even stopped offering a fully assessed pre-approval, which may come as a shock to you. The property market rewards action takers and decision makers. And after October, once we get these new first homeowner grants and the scheme coming through, I'm sorry to say, if you're struggling to get into the market now, next year it will be hard. Which side of the fence will you be on? Because you cannot sit on the fence this spring. G'day everyone, welcome back to another episode of the Australian Property Investment Podcast. I am pumped. This is spring. The market has sprung, and I'm going to talk to you about why the property market will never be the same. And if you're listening, what the next 2 to 3 moves that you need to do exactly after listening to this episode so you can play offense with confidence. And let me take you through why. As of today, we've got rates on hold and probably easing at some point, maybe later this year. This is a market that I haven't seen for quite some time, probably since COVID. My team, I call myself a bit of a broken record inside the business at the moment, but I'm seeing the market kind of reach levels where we were in COVID. I'm talking people buying without pre-approvals. I'm talking the banks taking far longer to turn around on applications as well. I'm seeing locations that haven't been massive auction markets, everything going to auction as well, which shows me how much it is a seller's market at the moment. Let me talk you through what I call a lead indicator. So a lead indicator is when new applications go into a bank, how long it takes a bank to assess those loan applications. Typically, those 3 to 5 business days is usually a good turnaround time on average. I'm seeing that start to blow out to 7 to 10 days. This is what I'm talking about being a lead indicator. All these are new applications going in on the front end for people that are trying to get finance approved to hit the ground running and start making offers. So these are pre-approvals. Some banks have even stopped offering a fully assessed pre-approval, meaning it comes in, they run it through a computer, spit out a paper going, yes, you're conditionally approved, go for it. And so some banks are saying because pre-approvals convert at such a low rate, they're not putting any bank resources around fully assessing a pre-approval, which may come as a shock to you because if you think you're getting pre-approved and you're not, bit of a shock horror there depending on which bank you're going to. So worth having a chat to your broker and going, is this a fully assessed pre-approval or is this a computer-generated pre-approval as well? Again, feel like a broken record, but I'm talking about the property market rewards action takers and decision makers. And after October, once we get these new first homeowner grants and the scheme coming through, I'm sorry to say, if you're struggling to get into the market now, next year it will be harder. I'm going on the record to say we will be seeing a massive uptick in the property market between now and probably the first half of next year as well, as we see competition intensify, particularly at those sub 1.5 markets for Sydney, sub $1 million markets as well around the country. So strap yourself in, probably get a notepad, and I want to take you through some of the ideas and thoughts that I've got to put you in the driver's seat to have success for 2025. So before we kick off, you may have heard me talk about our Property Accelerator, and this is where I bring together a community of like-minded individuals. We had ours, it's usually on the second Wednesday of every month. We run it for about an hour and a half. Last time it went well over an hour and a half. And I think this probably speaks to the sentiment in the group that you just want to hear from your peers. This is a space that when I get told I have no one in my corner that's thinking like me, talking like me, investing like me, and I want to be around some really great investors and individuals who are on the journey. People are just starting out. People have been scaling up and people that are towards the end of maybe selling their properties as well. If this is something that interests you, you want to be part of it, I absolutely will be opening the doors on that as well to our Property Accelerator. So drop us a message, send us Accelerator. If you haven't got the calendar invite, if you haven't got any details around it, please, I want to hear from you. Again, I'm talking about doing something that other mortgage brokers are not. How do we differentiate ourselves? This is not a marketing ploy. This is a way that we're building a community of investors that are absolutely going to be shooting the lights out, and you want to hear from each other. Yeah. So think about any high performance team. They hang around other high performers versus if you don't have that kind of fertile soil to be nurtured and to thrive and grow, how will you possibly put yourself in the driver's seat. So it's something that I've been it's been close to my heart. It's something that I've really been on my mind to say, how do we grow this community of investors? I'm not looking for a massive community. I'm looking for quality. I'm looking for the heart and size in the army, as opposed to trying to make this a big movement as well. Keep it kind of intimate, which is what we love to see. Yeah. So getting to know each other on a regular basis. Everyone's been sharing their wins, not where they're buying, but more, have they made a move? Have they got their finance in order? Some of the issues that maybe they're having with tenants as well. So I'm keen to get your thoughts on it. So let's start off with clarity and confidence. So to me, in a nutshell, what are you doing and why are you doing it? And probably this is the first tripwire that I see for a lot of property investors, maybe aspiring to go, I just need to get into the market. I'm saying, yeah, I know. I hear you and I see you. But central to any level of success in life is knowing the game plan and executing it. I'll give you some examples. Right now, we're heading to footy final season. So whether you like NRL, AFL, for example, you can see the teams that had a very clear game plan from the start of the year. They did their training, they did their roadmap to get to the finals, because winning so many games throughout the season was no accident. So you think about everything they've had to do in that time frame. And I'll give you the example I wanted to give you is I recently had the privilege of going and spending the morning training at the West Tigers Performance Center. So if you follow NRL, the West Tigers over in Balmain, out towards that way, I literally got to go into their training center. Incredible environment they've got. I'm talking physios, I'm talking training programs, I'm talking diet and nutrition, I'm talking army of coaches, for example, personal trainers, all there to support and enable their players to get the best on-field performance. Now, granted, they didn't make the finals, but you could see what it takes to get a team at an elite level as well. And if you're thinking about trying to become a top 1% property investor, that is elite level. So if you take that analogy and go, buying property and investing is a team sport, how are you building that support environment to nurture you to get success? That it's not an accident. You have a very clear and articulated strategy and you are executing and implementing that without fail. So having the next 2 or 3 moves mapped out, stacking the odds in your favor, being organized, that is exactly what I'm talking about. So is your support team on point? Is your current broker up to scratch? Is your buyer's agent up to par? Conveyancer, solicitor, accountant, property manager, is everyone reading the same playbook and executing where you need to get to in terms of the goals that you're after? To build that confidence, you absolutely need to know the problem that you are solving right now. And I'll give you some context, and you would have heard me talk about this in recent episodes as well. There's 3 problems that I say that we're solving for property investors. 1, borrowing capacity. 2, equity or a deposit. And 3, cash flow. So I want to go deeper and peel back some layers on those just so you understand with a bit more context as to what I'm talking about. Borrowing capacity is what I call the engine that you have. So call it a V6, call it a V8, call it a high-powered engine that's going in. Borrowing capacity will determine how fast you can go with your property journey. What increases your borrowing capacity? This is income. So the more income that you can get, the better it's going to be. So I'm talking commissions, overtime allowances, bonuses, for example. So have we factored in every single dollar that you can to bump up your borrowing capacity? Maybe even a side hustle, casual contract income. Maybe you're on a secondment, for example, and you're getting higher income. Every single dollar counts. Can we think about rent vesting? So if you've got the owner occupied, can we turn that into an investment, for example, move in with parents? And that way we're pushing up as much income as possible while trying to reduce your expenses. Okay. Speaking of expenses, this is the stuff that reduces your borrowing capacity. I'm talking credit cards, and I don't want to get on my soapbox. Cut up credit cards. It is the absolute killer to borrowing capacity. Car loans, personal loans, again, just murders borrowing capacity. We're not funding depreciating liabilities. I'm very clear on that, and I have been for a long time. Salary sacrifices, particularly around EVs, for example, it's awesome. Kills your borrowing capacity. Yep, I can't sugarcoat it. HEX and HELP. Sometimes there's some policies that help navigate that, or we can pay that out. And again, just get on with borrowing more money. We're not here to buy loans. We're here to buy homes. So don't be swayed by low interest rates. Rates are irrelevant when it comes to scaling a portfolio. So that means we're talking about, say, looking at non-bank lenders. We're looking at niche policies that will suit you, for example, and they can be brilliant in the right scenario and portfolio killers when you go to the wrong lender. So structure beats rate when it comes to portfolio building. I hope I've made that very, very clear. Great. So once we've unlocked your borrowing capacity, you understood what is available for you to then do, you can then start to sensibly explore structured options like buying through a trust company or through a self-managed super fund. You do the cart before the horse thing, and you absolutely risk boxing yourself into a corner that makes it very hard to come out of those structures, for example, as well. They are simply the mechanics on how to build a portfolio. They are not the strategy around building portfolios as well. So listening to this, what can you do right now? I would go back, I would list every liability that you have, income sources, start to actively look at, okay, what can I close? What can I reduce, say, credit card limits, for example, to its absolute minimums? So if you're not using credit cards, just reduce it. And it'd be funny, actually, when you look at the credit card points. Did you know that some of these, Qantas and Velocity points actually have a 18 to 24 month duration or limit on when you can use those points? So just think about it. You may actually not even be using the points that you're entitled to as well. So I'd start there. The next one is equity and deposits. So if we're talking about the engine, equity and deposits are the fuel that keep you going. So this is the ability to keep driving and building your portfolio. So if you have existing investment property or properties or your own home, my first step is, how do you get more equity out? You run multiple valuations. I've seen so many brokers just do one valuation. That's it. That's a lazy broking as far as I'm concerned. We do minimum 8 to 10 valuations, go far and wide. The next one, maybe we consider debt recycling. So have you got some cash? We can pay down your own rock loan, draw it back out to then go and invest. Yeah. So do not use cash to go and buy an investment property. If you hear that, like I said, run for the hills with your current broker or banker. Pathetic advice. What we want to do is think about the best way to leverage the equity that you've got. And if it means paying lenders mortgage insurance to unlock, say, at 90%, then maybe that's a price to pay that's going to get you enough deposit to go and buy, say, 2 assets. So maybe the $7,000 to $10,000 sometimes you might pay in LMI could put you into a supercharged property as a growth asset. And the LMI is simply a cost of doing business to get into a growth market as well. If you're a first timer and you're now trying to get into the market and we're using cash, this is the time that I'd advocate for using cash. So you're a first timer or you're a rent investor. You then have cash because you're not using equity, for example. The only alternative option to that, I'd say, is if the guarantor option is on the table and we're not using cash, we're using a parent's property that has equity to then get into the property market as well. So if you're picking up what I'm putting down, there are so many options here. You need them laid out in front of you going, that's a yes, that's a no, that's a maybe, for example. And the other part to consider is, can we split our deposits and go buy 2 assets instead of 1? That is a question that's not a one-size-fits-all model. Think about it, but then work out what are the implications for you to scale up. And we want to be 2 or 3 steps ahead of where you are when we're factoring all the costs, such as buyer's agents fees, legals, building and pest, bank fees, for example, tax, like land tax. The last thing you want is nasty surprises, which generally can derail your investing journey as well. So action point off the back of that, when we're talking about equity, speak to us, drop us a message, line up a time for a chat where we can talk about what I call a portfolio review. Can we do valuations on some of your properties? It doesn't mean we're going to refinance you tomorrow. It just means we're going to look at the equity positions that we can see that maybe your broker who's asleep at the wheel isn't looking at, and we can find ways to eke out more equity. The next one is cash flow. This is what I call a game of grip strength, and this is where portfolios live or die. I've said it before, who can hold on the longest wins. And there's nothing worse than what I've seen is when I've laid out a strategy for someone to go and buy 6, 8, 10 investment properties. And the first thing they do is go, I can't sustain holding that property because of the negative cash flow, i.e. the amount of red ink. It's normal. Start with one property, work out how that's going cash flow, then move on to the next. So don't get intimidated by the number of properties. Look at the bottom line as well. Okay. So these spreadsheets that sometimes come out from certain BAs, for example, or modeling that I've used, the wrong interest rates, they're not factoring in the 20% deposit equity strip that we've done out of your home or another investment property. They're simply looking at the 80% loan to value ratio. The rates, like I said, are incorrect. There's not enough holding costs factored in there as well. Maybe not even factored in land tax, insurances. Depending on the location, you might be jacked up for insurance there. So this is what I'm talking about. Slow down to speed up. Slow down, work through your numbers to then be able to put your foot on the accelerator to grow and scale your portfolio. Because I tell you right now, the one thing that hurts investors the most is being blindsided by costs that they didn't see coming. So this is on you. Cash flow is something that you can only manage because you know your cash flow. Your accountant, your BA, your property manager, your broker, we all have roles to play. You are in the driver's seat when it comes to managing your cash flow. So if you're on a fixed income, what needs to come out for this investment property to come in? So maybe build buffers in there. So we're talking about offset accounts, redraw, an emergency fund, which you might call a sleep at night factor. But like I said, if you're on a fixed income, you need to be very crystal clear. And we're all at different stages. We've got people, kids in private schools, kids that have daycare fees, for example, single incomes, single parents. You need to be very, very clear on your numbers that you can sleep at night, because it's not a matter of if something property related comes up maintenance-wise. It's a matter of when. All right. So I'm going to leave that there with you. So pull out your bank statements, go through it and go, right, what is discretionary? If you haven't done that already, it's a hard thing to do, to be real with yourself and go, is that discretionary? Is that essential when it comes to my living expenses? Because if you can't hold these properties through a vacancy wobble, rate rise, for example, then maybe we need to rethink the purchase price, location, or the asset type you're in as well. What I mean by asset type is resi, commercial, apartment, house. Let's have a think about it. All righty. This last point here is what I call my secret sauce. So when people, when listeners have come out off the back of a recent podcast episode, it's usually one of these elements that has struck a chord with them. And they're saying, yes, this is the person I need to speak to. And I'm here to take the calls from you guys, girls that are listening, because this isn't a marketing ploy. This is me trying to reach more people to help more people become high quality, confident property investors. Okay. So this is the stuff that I feel like has landed and resonated with investor clients out there. I'm talking, we've got people that are across the world, Aussies that are working all over the world, that we know that we're moving the needle on. The first thing is investing as a couple. You need alignment first. So before you go looking at a listing, before you engage a buyer's agent, for example, as a couple, are you on the same page? Are we talking about growth properties? Are we talking about yield properties? Are we talking about balanced portfolio, for example? What's our sleep at night factor? How much cash can we support to maintain this property portfolio? What happens if we have a period of lean growth, for example? Do we have a time horizon that we agree on, 7 to 10 years, thinking to allow this property to do its time, or is it an asset that will trade? Who does what in the relationship? So whose role is it to deal with the broker, the buyer's agent, the contracts, for example? Because clarity is key here. It helps making decisions go faster, and it avoids kind of stepping on each other's toes. So do you have a game plan that you both can sign off to say, this is our ideal purchase price, this is the type of asset that we're looking for, this is the yield that we need, and this is the ideal outcome that we're looking for? And if you can put that small plan on a page and engage a BA and a broker to do the loan strategy and a property strategy, you're in a good position. Henry's, high earners, not yet rich. I'm talking to you. So this is where I see the biggest opportunity is. We're talking about guys, girls who are earning some significant incomes, but are not moving the needle on your own wealth position. Just think about it. Right now, we're in a period of cost cutting. I'm seeing the amount of jobs that are being lost across, say, banking, for example. And if you're sweating bullets on your job, buying and investing in property is the ultimate hedge against losing your income. It sounds contrary because you're like, hang on, I don't have an income. How am I going to maintain this property portfolio? Well, you keep an emergency fund, and you should have an emergency fund as well. If you're on a good income and you're living paycheck to paycheck, we have a major problem here. Yeah. You can pre-decide exit strategies. I'm going to sell the property if this happens, for example. That's the worst case scenario. But let me ask you a question. If you're out there adding to the bottom line, sales for the business, revenue generating, you're in finance and you're watching the bottom line for a business and you're making your corporation, company rich and profitable, I've got to ask the question, why are you not doing this for yourself? Maybe this is a little bit of uppercut that you need to go, right, I spend all this time working long hours for my employer. Am I putting the same hours into my own personal balance sheet and my own P&L? Because they're buying your time, but they're buying your soul. And this is time that you won't get back in to invest in the market. The next one, if you're self-employed, single-handedly, the biggest opportunity that I see that's left on the table is business owners. Yes, I'm talking to you. You've heard me so many times talk about sweat equity. This is where you're trading your time for money. Hard years that you're not investing into your super, for example. Missed opportunities of not getting to the market because no one understands your business the way you do. I am self-employed. I've invested a lot into my business. But now I'm at a point where I'm like, stop trading that time for money, and now I'm trading for assets that are income producing. So can you clean up liabilities? Can you work on cash flow, for example? But the most important part is, do you have a broker that can understand your financials? And I don't want to beat our chest, but we're the broker for you. I'm telling you that now because I do mortgage brokers loans, and they don't even understand how it works when they're self-employed as well. In all my years of mortgage broking, this is by far one of the biggest areas of lending policy I've seen get easier. Self-employed. If you're paying yourself, they'll look at you as PAYG. They won't even look at the liabilities that you've got in your company. So if you're looking to grow your business and grow your portfolio, not or grow your business and grow your portfolio, there has literally never been a better time. Banks are actively trying to win self-employed business. We understand how to get it done. I'm telling you, if you need to scratch the itch, this is maybe this message that you need to hear right now that can get you alignment between your accountant who's probably trying to minimize your tax versus shooting yourself in the foot around borrowing capacity. I want to speak to you because I genuinely feel like you've put so much money and effort and time into your business. Are you seeing the rewards when the property market's compounding at 8% on average year on year? So if I wrap this up and I kind of go, right, as a mortgage broker, let me tell you, I literally have the best seat in the house. I get to see how everyone's buying. I get to see where everyone's buying. I get to see what people are buying. I get to see how portfolios are scaled and built with the right team. I get to see how portfolios die and people's dreams have not eventuated to what they thought their potential, what it could have been. And so what I'm saying is, let us help you, because literally the only way I win in this game is by helping more clients. It's a lag factor. You guys win first, I win afterwards. So how do you take our intellectual property about building portfolios? Because on our watch, I'm seeing our portfolios become top 1% property investors. I'm talking 6, 10 plus investment properties, a mix between residential and commercial. And I would throw down the challenge to say, is your broker thinking big enough to get you from where you are now to moving the needle to about where your performance and potential could be? The horse will bolt this springtime. The property market will literally never be the same. So if you thought COVID was a turning point, I'm telling you right now, if you think about it, when has there ever been a time with the government to go, are we going to let first home buyers get into the property market with a 5% deposit, in some states not pay any stamp duty or lower stamp duty, and you're not required to pay lender's mortgage insurance? This is crazy. And I'm saying it because the springtime we're in right now, listings are picking up. I'm speaking to agents, so you can start to see the energy and fervor. It's starting to pick up. Like I said, clients are buying that pre-approvals. Everything's going to auction. Rates are coming down potentially as well. Building supply is not picking up at the moment, and demand is strong as ever. So this is a competitive market that we're in. So the ingredients now, if we kind of just relay this back to yourself, is who will win in this environment? I'm talking people that can go with speed, people that can make offers, people that have their finance in order, people that have their conveyancer or solicitor ready to go to review contracts, people that can make offers quickly. You think about that's what buyer's agents do typically. They move fast and they guarantee that deals will get done. That's why they can buy off market, pre-market. Could you say the same thing about yourself, or are you simply window shopping and hope is your strategy? Buying quality. So what I'm saying is buy when you can, where you can, at a time that's right for you and what you can, okay? So I'm not saying just jump into the market and buy willy-nilly. I'm saying think this through. We want to be 2 or 3 steps ahead of you. So if you buy this under this structure, what does that mean for future purchases to avoid bottleneck issues such as running out of equity, running out of borrowing capacity, and to your point, running out of cash flow as well. So off the back of this, what are some changes that you can make right now? Can you close a credit card? Can you contact us to run extra valuations, which no skin of our nose, for example? Can you look at some of the side income that you've maybe been building? Can you build that up, for example, or can you build a cash buffer that gives you the peace of mind to invest? Can you lock down your team and say, right, I need you all to get on the same page because this is what I'm looking to do to buy my next 2 investment properties. I need you all to then start herding cats, bring them all on the same page and go, right, I need you guys to sort this out, and this is what I'm paying you a good fee for. The next step is, do you want to be part of the accelerator community? Yeah. Do you want to be part of a group of property investors that are seeking a bigger and brighter, better future? Because I can say with absolute clarity and conviction, the reason why we're investing is I want to build intergenerational wealth through property. I love what I do. I love mortgage broking. I won't retire. I've got no ambitions or desires for financial independence to retire early. The FIRE movement does not excite me. I literally want to keep growing and scaling our property portfolio. I don't know when it will end, but all I know is I want to keep buying when I can, where I can, and the right quality asset that suits our portfolio as well. And I'm sure if you've been tuning in, you've heard our own journey around the commercial property that we've bought, fitted that out, for example. I'm going to do a deep dive on that with Bernie. We'll take you guys behind the scenes in terms of what we've built and how it looks with our team in there as well, which I'm really, really excited to do. But I want to leave this as a message to you. If you want to be part of the Property Accelerator, the doors are open. If you need a hand building your portfolio, our doors are open as well. And if you need a second opinion, our doors are open. But like I said, the property market will only reward action takers and decision makers. Which side of the fence will you be on? Because you cannot sit on the fence this spring. I'll leave that with you. Thanks very much for tuning into this episode of the Australian Property Investment Podcast. Call a slight bit of motivation, or maybe a slight bit of uppercut that you need to get moving and going. I look forward to hearing from you. Thanks very much.